Hey, TMFG community. In today's episode of Ask TMFG, we'll be discussing the Sagan program and how it can help you buy your first home. But remember, if you do enjoy the content, remember to like, comment, and subscribe to the YouTube channel. We enjoy doing these videos for you. In today's episode of Ask TMFG, we'll be discussing the Sagan program. This program is offered by different lending institutions to help you buy that elusive home purchase. Of course, Carlo and I are not experts on mortgages. That's why we brought in Bob Dorrell, mortgage agent with Dominion Lending, so he can help educate us. Bob, how are you doing? And welcome to Ask TMFG.
Thanks, John. Thanks, Carlo. I'm doing well. Big fans of you guys. I watch your videos quite frequently.
Perfect.
Hey, love that plug, Bob. Appreciate it.
Exactly. Always great to have a fan on the show.
Yeah.
But Bob, we're here to listen to you today. You're the expert on the subject. So tell us a bit more about the Sagan program and how it can help Canadian families.
Well, the reason I think that this program, it's called the Family Plan Program. The reason I think it's important is because, unless you've been living under a rock, I think everybody is aware how much housing prices have increased over the past couple of years. What that's translating into is that for a lot of younger people, it's almost becoming out of reach. And so I'm getting questions from my clients, particularly parents who have younger children, asking, how are there ways in which we as parents can help? And I have a 21-year-old young lad here, and he's got friends all around the same age. And so I think this is relevant for many. And the idea here is that it's hard for these kids to qualify for a large enough mortgage to be able to get into the market. So Sagan, which is one of Canada's default, it's the largest default insurer in Canada. So there's three of them: Canada Mortgage and Housing, Canada Guarantee, and Sagan. If you ever have less than 20% down, you need to have the mortgage insured. Sagan is one of those insurers. So they have this program that is available through our lenders. It's called the Family Plan Program. And the concept's quite simple. So rather than, I'm going to just use my son as an example, and I'm just going to refer to mom and dad. I know there's other types of family units, but for the purposes of today, my son could apply for a mortgage on his own income. He's not going to qualify for a whole lot. The idea here is that mom and dad also go on that mortgage. And if mom and dad are in a good financial position and they have good income, what happens is my son's income and our income, it all goes into a pot. So our income, all of our debts get cobbled together, and the totality of those three incomes and debts are used for purposes of debt service ratio calculation. What that simply means is he's going to be able to qualify for more of a mortgage and increase his chances that he's going to be able to get into the market. So that's the concept. And it's important to point out here that all three would have to be on title to the property. And often what I see is, son might be on title for, say, 98%, me 1%, and my wife 1%. We all have to be on the mortgage because our incomes were all used. The reason that's important is for a first-time buyer, you can get the land transfer tax rebate. And by the son or daughter, in this case, the son, being on title and having 98% ownership, they're going to get 98% of that land transfer tax rebate back. If we went 50-50, he'd only get 50% back. So a lot of cases, and there's no right or wrong here, but typically it's 98, 1 and 1. And that land transfer tax rebate is up to $4,000 and more if you're buying a property in Toronto. So one of the things also to be considered here is that in a lot of cases, because there's the son and the parents, there's concerns around privacy of information. So in that case, we would take an application from the son, we take an application from the parents. They're kept completely separate and apart. The son won't see, and most parents don't want their kids to understand fully their financial situation. So that's not an issue. What we do on the back end is we merge all of the information so that I can see it combined, but the parties involved, it's completely separate. and privacy is assured. The other thing that's important to point out here is that the minimum down payment rules still apply. So 5% down on the first 500,000 and 10% on the excess up to $100,000. And as well, I should have pointed out maybe a bit earlier, but the son or daughter would have to occupy the property, for the family plan program, for them to be eligible for the family plan program.
That makes a lot of sense, Bob. And it sounds like it should be open and shut for young Canadians to get into the real estate market. But there's got to be, there's a lot. It sounds like there's a lot of benefits. Are there any cons involved to this family plan?
Well, there are some pros and cons. And, part of the magic, I guess, of the family plan program is that not a lot of parents have cash kicking around just to give to their son, even though, depending on the market you're in, first-time buyers are receiving a gift from parents either, somewhere between a quarter of the time and a third of the time. So it is happening, but not everybody is in that position. And as you guys know, we also have to worry about ensuring that we're planning for our retirement.
Right.
So, a con would be, because mom and dad are effectively co-signing on this mortgage, if they went to apply for credit in the future, that could impact their ability to get approved. Because when they go to borrow money, they're going to have to declare that they're a part owner in this property and they're partly responsible for this mortgage. And so that's going to need to be declared. So it could impact their ability to borrow in the future. That's the big con. The pro is kind of what we talked about earlier, which is the son is able to qualify for more of a mortgage because of the combination of the income and the debts and the debt service ratio. So they can qualify for more of a mortgage. Therefore, they can buy a house that's worth a little bit more and increase their chances of getting into the market. However, even though they can qualify for more, it's still important that the mortgage payment and the expenses are still within the son's budget. So they might be able to qualify for more, but it also needs to be affordable for the son.
That's amazing, Bob. I appreciate you walking through the plan with us. In our roles, John and I, we often see parents wanting to help their children get into the real estate market, and they come to us to see how much they can take out of their portfolios to help. And like Bob mentioned, I think the first goal we have to look at is looking after the parents and make sure that they can get through retirement and into the other goals that they have in retirement before they help their children out get into the market. So the family plan by Sagan is just one of those other things that they can do other than just taking from the portfolio and gifting it to their kids. So Bob, appreciate you coming on board with us and letting us know about this plan. If anybody has questions about this plan in more detail, we're happy to share Bob's contact information with you. Ask us in the comments and we can respond to you. So that's another episode of Ask TMFG. Be sure to subscribe to our YouTube channel if you do like our content. Give us a like, or again, give us a comment. For Bob Dorrell, I'm Carlo Cansino.
I'm John Iaconetti.
And this has been Ask TMFG.